The pandemic had a particularly negative impact on industries such as tourism, hospitality, and airplanes. Airlines such as United Airlines and American Airlines knocked on the doors of the banks in pursuit of a loan to pay their bills and keep their operations running. Airlines were offering their mileage programs as a mortgage, and when the values were disclosed, they were in the tens of billions, which was 2 to 4 times higher in comparison to their market capitalization. But how are these mileage programs so valuable, and how do these programs make money? Let's take a look at all these questions. Welcome to Wealthy Mindset, where we explore unique and breathtaking angles from the world of money, economics, personal finance, and investing. But before we dive into it, please like the video and subscribe to the channel. Also, click on the bell icon right there so you never miss any of our subsequent videos. Every airline in the United States offers a section of a mileage program where passengers can earn points based on how many miles they have traveled with that airline. Those points can then be applied to your next ticket in the form of discounts, hotel stays, or the purchase of additional tickets. These airlines are now borrowing money by mortgaging their mileage points to banks. There are no such valuation criteria for these points in true value terms, but analysts can only estimate their value, which is in the tens of billions of dollars. American Airlines recently conducted a third-party evaluation of the AAdvantage program in order to get a $4.75 billion Coronavirus Aid, Relief, and Economic Security (CARES) Act loan. The value of the AAdvantage program in the United States alone was estimated to be between $19.5 and $31.5 billion in the evaluation. That was so huge that the market cap, which trades live on the stock exchange, is $5.5 billion, which is approximately $14 billion less than the valuation of mileage points. United Airlines Mileage Plus is in a similar position. The airline is valued at $9.2 billion on the stock market, while its mileage program points are valued at $21.9 billion. This is done by multiplying the 2019 program's earnings by 12 times. United Airlines, on the other hand, was not as bad as American Airlines. United was able to generate $1.8 billion in earnings before interest, tax depreciation, and amortization, EBITDA, accounting for around 26% of the group's total EBITDA, indicating that the airlines were profitable. But here's where the question arises. How does this mileage program generate revenue for airlines? Well, there are two ways in which airlines make money. The first and most common method is for them to sell these points to banks in exchange for credit card points for the flyers. This information will help the bank target the ideal customers for credit card sales, which is also divided into two parts: travel, where those points are utilized, and marketing, which includes the intellectual properties, access to loyalty programs, lounges, in-flight sales pitches, marketing over the airport, and hoardings, among other aspects of advertising. Initially, when this program was launched, America saw deregulation in the airline industry, which resulted in airlines using this strategy to grab customers and not lose them to other airlines, even if they provided the same journey at a low price, because people would look at the points that they were accumulating on their account, prompting them to use it on the subsequent next flight. They would rather increase their points from 10,000 to 11,000 than pay less. However, the same point-based strategy is becoming costlier for the airline. For example, suppose that there are two destinations, A and B, and the most frequent flights to destination A are located at the same distance from the origin as flights to destination B. However, the issue currently is that the frequency of flights to destination B is really low, and the flight cost is extremely high. Getting the same bonus by paying low and using those points at the low-frequency destination is what makes it costly for the airlines. When you earn a credit card welcome bonus or other points through credit cards, airlines appreciate it. To provide you with those benefits, the bank must purchase additional miles from the airline. When this happens, the airline receives a financial boost. Even a small portion of the mileage transaction can be recorded as an immediate profit for the airline. Unlike partner redemptions, when customers redeem miles for travel on the airline's tickets, the company is not required to pay cash to a third party. Instead, the money is transferred within the broader airline company. Even better, when you redeem points for tickets, the airline gets to keep track of the money you set aside when you earned those miles. And with so many unsold tickets on airlines these days, you're unlikely to prevent a cash-paying customer from reserving the seat. So from now on, make sure you use your mileage points with the airline because they are crucial to their continued existence. We'd love to hear your thoughts and suggestions in the comment box below. If you enjoyed this video, slap a like on it and subscribe to the channel to stay updated with the latest business trends and interesting facts. You can also turn on the bell notifications so you don't miss any of our mind-blowing videos. We'll catch you in the next one. Until then, bye!